I want to make a video going over just charting basically a stock using just price action to find your points of interest and to know exactly what's going on, or at least where price could lead to. Um, with that being said, I marked out four things I look out for when I first come to, I first arrive to a chart. All right, so the four things I look out for is range, liquidity zones, liquidity voids, and the supply slash demand areas. So we're on Bitcoin right now. I have this actually reversed so we can kind of let it play out as we mark it up. So start with the range, and this could be a whole lot of things, but we have equal highs right here, and we could take either down here, here, whatever you want to do. Usually what I do is I look for something that has a strong reaction off of the the midpoint. So basically this is halfway in between the top and the bottom. And with that being said, I think this is probably a strong point either right here or here. You could see it was reacting off both ends. So we'll just leave it on the bottom. This was the first low, so we can mark it out like that. And on the highs, you either have something like equal highs or previous support that you can tap into, like this candle right here, this down candle, and you can mark that out as your range high. Now, with that being said, then what you want to look for is where is the liquidity in the zone. So we've already had it kind of play out, and we can see right here this was taken out. So I kind of marked this out as manipulation. So we had liquidity right here. We probably had stop losses right below this point, the range low, then right here and right here. None of them were swept, and then you could see all of them were taken right here. So all the liquidity, all the stop losses were hit on this way down right here with a strong reaction to the upside. So we could see that this was already taken care of. All this low was already swept. Now we have shorts with their stop losses. We need to start taking their liquidity on the way up. And you could see we have these taps right here where we don't have any sweeps. So like, let's say we had, this high, and then we went above here. That would mean that we took out all this, but we didn't. So we have equal highs right now, which means that we probably have a lot of resting sell orders right here for short positions. And also we have an area where breakout traders would be interested in. So that's our first point of interest. Mark that out. There you go. And we can also see right here that none of the lows have been swept as well on the way up. And if you really look in, we also have equal lows on this candle and this up candle right here. We can mark that out. So with those being marked out, now you know points of interest. And instead of just guessing, you kind of let it play out. So this is step 2, liquidity and stop losses. And then you want to find the voids as well. So we had a strong reaction after this manipulation, taking all these stop losses right here of the long positions, a strong position to the upside. So what can we do? We could see that there was a void of price action in this area, or liquidity void. So we mark that out because price will eventually be drawn to it. Will it be drawn to it right away? No. Sometimes it is, sometimes it isn't. But it's worth noting that price will most likely, if it does come in this area, down, range in here, and continue with whatever it wants to do. Now with that being said, we also need to mark out our last thing, which is supply slash demand areas. Now, price will always favor liquidity over supply and demand areas. So, if we were down below, what most people would have probably expected is maybe we ranged up, then we did a retest onto like these demand areas. But because we sweep so much liquidity at the bottom, the next point of interest was really the top. So we never really got that retest that some people were probably looking for. So you have to always keep that in mind. Liquidity is always favored over supply and demand zones. But it's always worth pointing out. And the best thing to probably do is start in higher time frames and work down from there. So we could see we have this 4-hour supply area. And what a supply candle basically is an up candle for a downward move or a down candle for an upward move. And usually the way to look at it is basically there was people that went long right here that are now trapped, that are underwater. And the higher the time frame, the more people were trapped within that candle. So we can mark out this 4-hour supply. And there's nothing really you can see down here. So you have to zoom into a closer time frame and you can see that is a demand candle right there. So I'm actually going to stretch these out a little bit more. And we could start playing with price. Now, what we have to keep in mind now that we have all this marked out is what are the scenarios. So let's say price comes down and sweeps the equal lows and sort of the trend line lows, and then starts filling in these voids here. Then we could probably either look for an entry down here, or we can go on a lower time frame and look and see if there's any demand zones on this way up, which we do right here, this 15-minute candle that I already had marked out. So we can look to see possible entry points there and targeting our liquidity at the top, these equal highs right here, possibly either into the supply zone or just targeting the equal highs and the lows of that, or of this 15-minute candle as your stop loss. So let me go back up to a higher time frame. So let's say we do break down, we fill in this void right here, put in some price action, either tap the 1 hour or the 15-minute. Most likely that's a good indication of going long with a target up here, either at the supply zone or the sweep of this liquidity at the top of the range. Now, let's give the other ultimatum. So, let's say we just range, we leave it here, and eventually we sweep these highs. Now, if we sweep these highs, then what we can probably look at is we have this liquidity to fill, we have these areas of no sweeps of the lows, probably have more lower or higher lows that are not swept on the way up. And we probably could start looking for a short position down into the bottom of the range. So what we can do is either tap into the 4-hour supply zone, targeting these lows, targeting the bottom of the range, whatever you're comfortable with. You can trail your stop loss along the way down, whatever the case is. But basically, what you're doing with this is you're marking out and you're letting price come to you. You're not guessing price. I'm not buying right here and hoping because there's a 50% chance it's going to either hit this area or this area. No, you want to maximize your risk reward. So right now, if I'm risking $100 in return, if I win, if it's correct, I get $300. And that's how you need to look at trades. You can't always have a 100% win rate, and it's even hard sometimes to even have a 50% win rate. But if you put the odds in your favor and you let price work it out to you and you're patient, then you have a better chance of making it as an actual successful trader. So what we're going to do is we're just going to start going through and letting price build up and see if we see anything. So we got to sweep these highs. Now, where can we start looking for possible shorts? Because we know the rest of the liquidity is down here. With that being said, we could look for shorts at this 4-hour, or we could even zoom in more and find another area of interest on a lower time frame. And it seems like You can tell by this previous price action that this is a respected supply zone. You can see it wicked in multiple times before pushing downward. You can use this 1 hour or this 30-minute candle right here if you want, but this 30-minute candle respected this 4-hour candle. So I'm going to most likely just stick with the 4-hour entry, targeting the same low. We'll do that. And we'll just right now just target the mid-range. So you can see we got a wick right into it and instant rejection. Now, sadly, price has not played out enough just yet. So what I'll probably do is I'll probably honestly just let it play out for the next couple days, and then I'll upload this video just to kind of give a better idea of if what I'm saying is correct or not. But you can clearly see right now we have a strong reaction off this 4-hour. Let's zoom in a bit more. Strong reaction. We couldn't even get a candle close on the 30-minute. And let's see on the 15. On the 15, we got a reversal candle. So obviously a strong reaction off the supply. So it's a valid supply area, giving us better odds of this potentially working out as a play. We can also look and see we have no sweeps of the highs. So we can take this just to get an idea. We have no sweeps of the highs. So there's probably stop losses at this low, 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 and especially at this point right here, which is the mid-range. So what we can see is there will most likely be a cascading effect to the downside, filling in that liquidity void, taking all this liquidity on the way down, and then from there we'll let price play out and do its thing. But we can see its clear objective right now. We already hit this supply zone. It's already valid. It's been valid from this previous price action, and it still is valid even it's been close to 5 days, and this supply area is still valid. So I'm gonna let price play out. I'll check back in a couple days, but that is my trade, and let's see what happens.
The next day.
And you could see the trade worked out basically perfectly, going off of the 2 points of interest I was looking for, which was this supply zone after sweeping this liquidity at the highs, at these equal highs, and taking all this cascading liquidity down below, all these stop losses at the lows, and eventually these equal lows around the mid-range. And you could see we never got a break of this 4-hour supply, and we got just a sweep of these lows at the mid-range. So this is why I love the strategy so much. This is why I love this approach, because it really lets you define how close you can get to possible reversals and points of interest. So this was only like less than a 2% point of reversal where we were targeting. We were risking, less than 2%. And you could see targeting the sweeps of these lows, we basically got it right on the dot with less than 0.5% of it stretching past, with an overall move of 7%. So your main objective is just getting the meat of the trade, not risking anything more. We weren't targeting the liquidity void. Will price go down there at some point? Possibly. It's likely. But we know where the objectives are, and that's what liquidity is. Liquidity takes precedence, and the range also lets you see where the liquidity is as well, showing the lows and the highs. So liquidity, then supply and demand zones, and then looking for the voids for possible stagnation, points of reversals, things like that. So hopefully this was helpful. Let me know if any of this was confusing. I'm hoping I kind of simplified it and Didn't go too in depth for anyone that's somewhat new to the price action strategy. As you can see, I don't have any indicators on here. I'm strictly just going off of what I see on the charts. And if I was to guess, just throw my hat in. I don't. We might get a retest of this high, and then filling in this void right here through the weekend into possibly next week, starting to take out some of these stop losses of these shorts, because we are net short overall. A lot of shorting, basically negative funding across the board. So if I was to guess, that would be what I would assume, but I won't be taking any trades until price action comes to points of interest, such as this demand zone, this 15-minute, filling in this void right here, or maybe retapping this supply zone. But yeah, thank you guys for watching. Let me know if you have any questions, and thanks for sticking around. Goodbye.